SBI Funds Management, India's largest asset manager with 9 lakh crores as assets under management, is filing for a 13,500 crore IPO in March 2026 with listing expected by September. You have an SIP in any SBI mutual fund. Here's what this IPO could mean for you. What SBI Fund Management actually is that they manage the SBI Mutual Fund, which is the largest asset house in India. For 3 crore investor accounts with around 9 lakh crores as asset under management. Every SIP that you run in SBI Blue Chip, SBI Equity Hybrid, anyone, this is the fund house that's managing your money. Now they are going public with an IPO worth 13,500 crores in September 2026. Is the biggest asset management company listing in India. It's a conflict of interest here, which you have to understand. When your fund manager becomes a publicly listed company, they have two masters now. First is you, the investor. And secondly, we have the shareholders. Shareholders want higher profits. Higher profits come either from high management fees or high assets under management. If they raise the fees, then you, the investor, has to pay that. If they chase AUM growth, then they might take on too much money. This will dilute returns. Small cap funds are especially vulnerable here. This is the tension that every publicly listed asset management company faces, be it HDFC, AMC, or Nippon India. So what changes for you SBI investors is that if you're a short-term holder, then pretty much nothing. Fund will continue as it is, same expense ratio, same strategy. But if you're a long-term investor, which most of you are, have to watch for two things. First, does the expense ratio actually rise up post-listing? Secondly, does the AUM growth accelerate sharply, especially in small and mid-cap funds? Because too much money in those funds kills performance. This is no financial tip, but we have to understand that we have to stay aware, be it as investors or as shareholders. Don't have to panic or redeem your SBI holdings right now. You just have to stay aware. Post IPO, the fund house will have quarterly earnings calls where they will report profit. You need to track these calls, track the expense ratios, as well as track this fund's performance with its peers. The IPO itself is not bad. It's just that the incentives have changed altogether. Follow for more.